letting your winners run. Today we're talking about this simple idea of letting one contract, letting 100 shares, 20 shares, 30 shares run after you hit your profit target, and talking about, the mental aspect of that, talking about the profit aspect of that, and how this could obviously improve your P&L by letting some of these winners, really just kind of run and look for opportunities to kind of move those stop losses up as we go. We're going to show you a trade, talk about what it went down today, and the idea of letting your winners run. That's something that I'm really focused on right now, and we're talking about it right here in this video, so make sure you guys stay tuned. So looking here at my trade that I currently have going on, I entered here for the breakout over the 152.75 area, and I started selling as this pushed up there to the 155 area. Now, the thing about this, about keeping a runner going, is let's say this pushes too high of day and then obviously squeezes above high of day at that point. How much more opportunity am I capitalizing off of by letting that last contract, or, the last 100 shares, 50 shares, 20 shares, however many shares you have, how much are you capitalizing by being able to hold that runner and let that runner go? And this is something that I've kind of talked about before. I think a lot of people have kind of talked about it, and I would say I've probably also kind of battled this emotion as well, because it's like, okay, right now, I could lock in $13.75 in profit. I could lock that in right now, right? Or I could let this run and give it some time, move my stop loss up as it goes. And I think that's something that I really need to focus on, letting these trades, when I do enter a good trade, let these trades kind of work out and then leave that last runner to really capitalize off momentum if it's there. And earlier was a pretty good example. I went long here at open at the 43 area and took profit here in the 48s, but you can see it ended up pushing all the way up here to 59. So that's another 10 handles. It's another almost $100 in profit. Another $100 in profit that I could have capitalized off of just by being able to hold that last runner. And obviously I probably wouldn't have sold right at the top, but I could have, moved my stop to here and then moved, I might have got stopped out at that point. But in general, at that point, if I'm up 10, 15 handles on a runner, I'm probably going to take a little bit of profit. I'm going to take that profit at some point. There comes a point where I just got to take some profit. Now, and the same thing goes, this is with stocks, this is with cryptocurrency and all that kind of stuff as well. If you have this opportunity, like right now, like I said, if this pushes up there to a high of day, and I'm up $15 currently, if I locked in that $15 right where we are right now, that's $15 profit. Hey, no problem. But if I let this run, and this runs to 160, up to the 60s there, and then I double that $15 to a $30 profit, in the long run, how much more am I going to make, and how much better is that opportunity going to be? Because, and this is something also that I've talked about before as well, it's easy to hold onto a loser. It's easy to hold on to a loser till it gets to your stop area and you finally get out. It's hard to hold on to a winner and let that winner run to the highs or higher than that. So really it's a question of am I taking profit at a good spot? And I feel like I'm doing that. Overall I'm green. That's totally fine. But it's also like, at this point, what is it going to cost me to let a runner run? If this pulls back to my break-even area, what does that cost me? I'm covering my commissions by basically moving my stop up above the break-even, and then really it's one contract that I'm covering the commissions. It's basically a free trade at that point. It's free profit. If this thing goes to 160, that's another free $30, $40, whatever you want to call it. Whatever it goes up to, that's free money in my pocket that I'm already covering by basically moving my stop loss up above my break-even point to a point that I'll break even on the commissions. And if you're trading stocks and you don't have commissions, this makes it even easier because you can literally put your stop loss, a few dollars or whatever right above where your entry is. So that way, at least you're making a small profit if it does pull back. And I think this is something that I really need to focus on. And I'm kind of interested to look at the metrics as well. I'm going to try to keep track of this and really kind of look at like, okay, earlier if I would have let one contract run from that 143 area, and let's just say I would have taken profit at the 155 instead of here in the 149s, that's another 5 handles, that's another $20, $30 in profit. And in the long run, how is that going to play out into my overall P&L in the long term? So, am I able to let these runners run? Is that, number one, am I being able to capitalize when those opportunities are there? And then are those runners paying dividends? Is the way I should look at it. Are those runners paying dividends? Are those runners, helping me long term here with my profit and P&L? So that'll be one thing that I'm kind of keeping an eye on. Let me know what you guys think down in the comments as well. But you can see, like right now, it's pulling back. Obviously, I could take profit right here at the 155 area. I could lock it in and say, hey, great trade. We took profit. Or I can kind of move my stop up. I can move my stop up to, I'd say like right here at the 154 area. So that 154, that 155, I'm thinking to myself, if I take profit right now, I'm locking it down. But if I, put my stop kind of right in that area, if I get stopped out, I'm going to take a little bit smaller of a profit, but I'm also going to capitalize if this does push higher from here. So that's something that I'm kind of really trying to focus on and work on personally, and hopefully you guys are kind of seeing the process that we're going through here and getting everything kind of dialed in. We're working on just small green days, being consistent, letting my profits run, and also stopping out of trades. I think that's one thing that I've battled in the past is not stopping out when I needed to and letting those losers grow too big. So now, instead of letting my losers grow big, I'm going to let my winners grow much bigger with these runners. And like you see right there, I moved my stop to that 154 area, which was kind of like where I was thinking like I might take profit here, right? Like this is where I took profit at earlier on these contracts. So, okay, let me just put my stop at that point. If I get stopped out, then, we still lock down $10 in profit. And it looks like I might get stopped out right here. So we'll see what happens right here. It's going to stop me out. You can see today I'm up $61 on the day. Kind of a slow day. We've had kind of a slow day, had a kind of a battle at open, kind of chopped around, and it just ended up going to the moon. Wasn't able to capitalize on that full move there, but still trying to capitalize here on some more momentum, pushing higher. The market has just been on a tear. Like legitimately, it's been on a tear. So we'll see what happens. Might get stopped out here. It is what it is at this point. But like I said, I'm still capitalizing here. Instead of just taking all my profit right there at the 154 area, I can leave this runner there. If it pushes to the 159, that's going to be that much more profit in my pocket. It's basically a free trade at this point anyway, because I'm already locking it in. So if I take profit now, it's like, okay, I took profit. But if this thing does push up and goes higher, well, then it's, just more money into my P&L and offsetting, some losers and things like that as well. Because like I said, it's much easier to hold on to those losers. And I'm sure you guys know that at the end of the day, like you're probably like diamond hands when it comes to holding on to a loser. But when it comes to, capitalizing on profit and letting a winner run, it's much harder to do that. So we'll see. We'll see what happens. I kind of want this to go to the moon right now because it would really kind of help my thesis on letting these runners run. But either way, I think it's been a good trade. And we're green on the day. Small wins. That's all I'm really focused on right now is just small consistency and, just getting into it. Just staying consistent, being about it, living, breathing, dreaming the market. And really just, having my finger on the pulse here. And right now the market just wants to go up. So I've been pretty bullish in that sense of buying the dips here. Let's see. Well, it's pushing 156. I think I'm going to move my stop to like right below this candle. Well, we're right there anyway. So put it like right there. It's right at the bottom of that candle there now. So, let's see what happens. We'll see. If you guys haven't already, do me one big favor. Hit that subscribe button, like button. Let me know what you guys think about letting your winners run. Do you have a certain theory or a process to letting your winners run? Do you have a percentage that you always let run? Let me know in the comments below. I'll talk to you guys later on.